Thanks for joining us, Tom. Let's start off with what we just heard, which is you had recently spoken about the fog that's out there on policy. Are you expecting Wednesday to have greater clarity?
Well, we'll see what we learn on Wednesday. I don't know any more than you do. But my sense is it's going to take a while before people know what rates are going to be imposed on what countries and what products, for how long, with what kind of retaliation. And then importantly, how do countries and businesses and consumers respond? So my base case is it'll take a while to get clarity here.
You've been on top of this issue of how companies respond from the very beginning of the pandemic, and you were one of the people who pointed out this idea that you thought there was pricing power after like 20 years when companies didn't have it. Where are we in this process, and does the idea that we just went through a period of inflation make you more concerned about prices going up more broadly beyond tariffs?
So I've been reflecting on 2019, 2022. In both cases, we had supply cost increases, 2019 tariffs, 2022, all the supply chain issues. In 2019, everything was anchored. I mean, businesses didn't think they could pass on price. Consumers didn't know what a price increase was. And we really didn't see a ton in terms of inflation. Go to 2022, where businesses just had the imperative they had to do something. Right. And consumers had the stimulus funds and other excess savings that they could use to spend it. I think this is very different this time on both dimensions. The suppliers I talk to are emboldened. They're saying very explicitly they're going to have to take it on. We're going to have to pass those prices on. The consumers are exhausted and frustrated and tired of paying high prices. Think of it as a cage match between a very strong, immovable force and an irresistible object. And I'm going to be very interested how this plays out. I'm not as convinced that people are going to be passed the tariffs on. I'm also not as convinced that there's not going to be inflation.
I want to show you our inflation outlook from the Rapid Update today. This is the average of the PCE, core PCE forecast of 14 Wall Street forecasters. You probably follow all of them, Goldman and JP Morgan and everybody. And when you look at it, you're at 3% at or near there for quite a while. Tell me where you feel comfortable cutting interest rates in an environment where, for example, by the third quarter, you still have a 3% core PCE, a percentage point above your target.
Well, let's start by saying these are forecasts, and their forecasts have been every bit as good as my forecast.
Right.
I mean, I think to cut rates, you'd have to get confidence on inflation. You'd have to get confidence that inflation is settling. You could get that confidence because it actually continues to settle. You could get that confidence because the economy is in such tough shape that you feel that whatever downturn you have will also settle inflation. Or I guess you could believe that these are just going to be one-time, 1 month, 2 month events and you're on the backside. But the core to me is it's all about inflation. And the higher the inflation numbers, the less likely are you going to see that.
It's definitely, according to some, about the inflation part of it. The problem is that some say stagflation, if not a principal risk, is the here and now. Would you listen to a soundbite from Robert Kaplan, the former Dallas Fed president, just the other day with me right here, and I want you to react to it on the other side.
We are in kind of a slower growth, sticky inflation period right now. That is stagflation. The issue is growth going to slow dramatically more than what we're seeing, i.e., is it going to go from expecting 2.25, 2.5 to 1 3/4? Is it going to slow to 1 or down to stall speed?
I feel like the chart that Steve put up with those expectations of core inflation only underscore this argument as you keep getting GDP expectations come in. Is this stagflation now?
Well, first of all, great to hear Rob again. Hope he's doing well. And I'll just say that when we use the phrase stagflation, we're immediately talking about the 70s. And stagflation in the 70s had one more piece to it. It wasn't just whether you had high inflation and lower growth. It was inflation expectations getting out of whack. And the reason Volcker and others had to do so much about stagflation was that expectations were out of whack. So far, at least the market measures are in good shape. We've obviously gotten some negative numbers from the Michigan survey. That's something to watch very closely. But my belief is as long as the Fed does what we need to do, you'll keep expectations in shape, and therefore you'll keep the medium to longer term stagflationary impulses out of it.